I was like, let me bring in the car. I'm good. Huh? Like I told you. Oh, those headphones are crazy. The headphones are crazy. Which one are they? The Sony? The Apple.
AirPod Max.
It's completely black out all the noises. Yeah, it's crazy. One time, bro, I'm on the street, right? I'm on the street thinking like, there's hella cars going by with like, there's a car show. It was loud, and I'm doing my Zoom, so I keep pausing, and they're like, "Yo, like, why are you pausing?" I was like, "Y'all don't hear all these fucking cars?" And they're like, "Nah, we don't hear shit." And I was like, "Well, shit." Yeah, they was killing it in there. Yeah, me too, actually. You get it later. That one. Okay, yeah. Hear me? Or can you hear all the background noise and shit? You could eat a ramen bowl, but all the extra stuff might be extra. Like the rice.
Then I'll get rice.
Oh, yeah. Oh, okay, yeah. Okay, y'all hear me right now?
Yeah,
Yeah, I hear you. Like, yes.
Oh, I like your makeup.
I love your too.
You have to say the same thing to me.
I love your face.
Yeah.
Can you give one?
No,
Okay. And then,
Yeah, y'all can hear me, Shane?
Sorry?
yeah, I got a question.
Chicken wings? Chicken wings? Yeah.
You guys pay to the water.
Hello?
Okay.
This might be a quick Zoom, not gonna lie. We already up crazy right now. Yeah, let's shoot some questions. Yeah. I'm not forgetting how many. Okay. I'll get one comment.
3 piece or 4 piece?
3 piece. Hey, yeah, I could go on over the entries and stuff. All right, I'm trying to give everybody time to get in. There's only 4 of us. We usually got like 10 to 15 people. Oh, yeah, we stretching. Oh, yeah, good easy, bro. We're getting that. Matter of fact, we're not even getting just that. We're getting 380 type shit. Because this is the order block right here. I'm gonna be out at 3:30. Oh shit, where we at? Here's 330. I don't know if I should be too picky. So I'm out above this. I'm out above this right here. 14 bands plus the 4 bands from earlier. So almost like a 20K day. If we get this shit going. Uh, multiple accounts. We out just before 18:30. Sometimes they like to play games before actually giving us the number. Oh, there it is. Well, I'm not gonna be mad on it. They can do what they like. Hopefully, you guys are able to have a bit of a trade. We're about to get the level in question right now, and we can go over the trade. And bro, the accuracy crazy. That 330 is crazy. I didn't see any shotties. I'm gonna take the photo on the chat and then we can talk. Yeah, there's gonna be background noise, bro. Is that bad? I can make it more aggressive. Noise canceling. Let me try making speaker environment.
No, you're good, bro. I just didn't know if it was just me or not.
Yeah, I'm in a little store right now. I had that slide by for the light first. Can you hear the background noise still? Well, if y'all can hear me clear, let's recap the trade. That's going to be it for me today. Give you a breakdown of everything. Hopefully, this can add some value for the game. So, simply put, higher time frame stuff real quick, just to where I got the 18 through 30 level. It's nothing complicated. The 18 through 30 level came from the highs here. So you can see this whip right here. And this order block area. 18 through 30 came from this side over here. If you look on the 15-minute chart, I believe, like exactly at 3:30. I let the chart load up. Uh, the 3:30 level came from this right here, the top of this order block. So if you hear next one, pick it up, we extend this order block. So that order block went all the way across, gave me the 3:30 level. Noise is scratchy. Yeah, I guess the voices are pretty close. Yeah, can I get the puck? Can I get that? All right. Can you hear me better now? There should be no crazy interference. How we sounding?
Yeah, you sound better now.
A lot better? All right, cool. A little more clear, or that's better? Hold on. Let me change this shit.
You're good now. You're good now.
All right, good. All right, cool. Let's break this shit down, right? So 15-minute chart is where I got the high and the order block from. It's like way over here. On the 4-hour chart is where I saw the high. So I just went into a smaller time frame to see what we would be dealing with at that high. And there just so happened to be an order block there. I wanted the top of the order block or the middle of the order block. I was just being more aggressive and went for the 30, right? Really, it's just the halfway point or the top part is what I was aiming for initially. So that gave us the price target, right? But there's a lot to break down in this trade and the philosophies that I had behind it. So for one, on the 4-hour chart, we had this going on, right? So I'm used to seeing this picture personally. So this is a little bit of a confidence came from experience, but technically this is a retail pattern, right? So we have an order block right here, right? An upside order block. So let's change it green so nobody get confused. And then we have that wedging idea, right? So you can see the trend line pushing down on price. And then we can also see the trend line here pushing down on price. And that's just giving us that direct point to get to the order block, which is where we wanted to get entries from, which I believe is the trade we caught yesterday, trying to break out. And then it ended up coming back down, aggressively clapping us. And then the 1, 2, 3 took place and actually took it up. That being said, after we broke out of this scenario, they liquidated it so many times. But what gave me the clearest confidence, right? We have the level 18,330, which is price target. So let me put that back on our chart real quick. 18,330, right? Now, if I go back to the 15-minute, this is what I talk about when we are in the models class, right? So we like to think about the 936 strategy. So the 936 strategy showed me at 9 o'clock, which is right here, 9 o'clock, we have this kind of high, extend that across. And then we have a low, extend this across. This area was Asia's session, right? So Asia session. Let me make this like a rectangle or something. So that's Asia session. Now where's 3 o'clock at? 3 o'clock is this high wick here. So that means this is London's high. Let's change the color on it so we can differentiate them. And then we'll probably write on it as well. Now we need London's low. So that's 4 o'clock right here. Matches perfectly with a 9 o'clock high, right? If you want to be on the wick, you can bring 9 o'clock's wick a little higher, but general area, right? So let's put another zone here. Change the color. I really hope this doesn't sound too familiar because, sorry, it doesn't sound too crazy. It should sound familiar because this is what we go over a lot, right? So here's 6 a.m. 6 a.m.'s high is up here. This will be New York's high. Change that color. And then we need New York's low, which we never really got, but New York's low is what we were anticipating, right? So let's make this pretty real quick. So here's NYC. Does anyone not know why 936 strategy is this way? This is Tokyo. Okay. Here's Tokyo, and then here's London. Here's Johnny. All right, so we got Tokyo, London, New York. So in order for me to get my entry, around 6 o'clock, I was looking at the market, and this is the picture I had. Whenever it decides to load. So this is the picture we had. So now, based off of everything we learned, the 936 ideology. Can you guys type in the chat if you got the confidence to? It doesn't matter. Like, we're all trying to learn here. So usually, if we know Tokyo got in and London got in, where does New York usually try to get in at? If you guys could throw something in the chat. All right, cool. Tokyo. Tokyo, London high. So when it comes down to the 936, it's just about it's about like a premium and discount ideology, right? So if we're talking about premium and discount, New York knows where Tokyo got in and where London got in because New York happens at 6. So New York is up here. So right now, price is up here with New York, and you can see they sold it off. But where would they be targeting? So first we have to ask ourselves what's in the way. So order block here, here, and here. Can the market just completely obliterate all of these order blocks and get all the way down to Tokyo's low without making this look bearish? It's really high and far away from Tokyo's entry and London's entry. So sometimes New York has to settle for the halfway point, right? So when we talk about the halfway point, they probably can't get to Tokyo. And if they take London down to these lows, it could make the picture look really bearish. So the best thing they can do is find a good order block in the London session. That being said, this is about the closest to the halfway point of London session, right? So if we take this box, put the median line, they're probably going to want their entry a little bit under the halfway point of London session and as close as possible to Tokyo. So that's going to be somewhere in this area, but we have no idea where. So as this market continues to do whatever it does, let's see if these candles will play out for us, right? So you can see it slowly rejecting, and then it goes down to the median point. That median point and an order block there. So that's the most advantageous point for them to want to get in, because if they take it any lower than London and Tokyo, that could allow London and Tokyo's automated algorithms to stop out. They don't want to stop them out because they need their money in order to make a really big move. So once they got in the halfway point, they used what they got. So all they had was the order block. So that's why we had to get our entries at the order block. Now, when we got down there, it was a little fishy, right? Because we didn't know, like, all right, is it going to use the middle of the order block? Is it going to use the top? So if you guys watch the recent videos I put out, we like to use the middle as a target. So you guys saw me in the chat put, yo, like, I'm getting in at 18,257, but it decided to push a little lower, and we said we get stopped out at this down here, 247, but like it barely went down there. So here's an order block on the 5-minute. This is where I was like, all right, that's the last line of defense. And look at that. Perfectly to the middle. That was exactly 18,247.75. So it's 75 cents off of where we were going to get stopped out at. And from there, perfect run, right? You can see as soon as market open happened, they took a reach back for this order block here that they created around 9:05. Reach back, grabbed it, and then they took off. And the level in question was just the high, which was 18,330. I set buys at 18,247 there. Oh, hell yeah. Oh, but you missed it by 75 cents, huh? That's tough. Sometimes it's all right to chase it, you feel me? So, I mean, as long as it makes sense and if the play is going to go your way. But if all that makes sense, like, it was a very, very well methodical trade, right? This wasn't some fucking on the whim kind of idea. Like, this is what accuracy looks like. Okay, this isn't like, oh, I'm just guessing. That was my headspace of, all right, Tokyo, London, what's the analogy here? What could I use in order to say, where would they get in? Where would they get out? Where are they trying to target? So based off of the ideologies we use, order blocks, trends, highs, we were able to, methodically find an entry and then manage our risk by using the order blocks. And if they got closed out, cool, we would have to get out. But everything was pretty squared away. The entry was a little aggressive, which could have made us put our stop loss a little closer. But I had profit prior, for some of the trades that allowed me to hold it a little longer. I said 75 cents too high, valid, bro. So yeah, if that makes sense, bro, like, this is the trade. But this shit happens every single day. Just some days look a little better than others, so you're able to actually target it.
So hopefully this breakdown actually makes sense. But that was a fire trade, and I personally made like 2300 or $23,000 off of it. Took 20 contracts here, took it to the first safe profit, safe take profit, to give me some room, and then I let the other 10 contracts hold up, took it all the way to price target there. So risk management. So yeah, nothing about this was guessing. It was all just risk management and just purely accuracy with the order blocks and the entry. So the better you can identify these areas for the time zones, the better you can find where they got their entries, or for buys or sells, and then you can kind of get in with them. Helps create a bias. Yes, sir. Yeah, that's the 936 strategy. 936 allows us to gain a bias, right? So if we know all the countries got in the same thing, for example, this is very obvious. I don't want to insult anyone's intelligence. We're all learning here, but to me, this is very obvious, right? We have 9 o'clock sell off bottom, and then we can see 3 o'clock sells off perfectly to the 9 o'clock high. That's a very obvious giveaway. It ran it even higher than the start. And then New York just struggles very heavily, eventually getting to where London's high. London's high is like right there, right? That little white line. So as it fell through London high, it's going to need one of these order blocks. So it just choose the lowest one that it can get. And after that, I mean, if we get a nice run, cool, I can stay in the trade. If we don't get enough momentum and I need to get out because it could potentially go down, So not all of these are always guaranteed, but you can use, the things to your advantage, like the volume anchors, zeroed out orders, right? Order blocks and such, and follow the trade. So I hope this made sense and added something to the arsenal, right? But this is simply the 936 strategy. There's some 1-2-3s in here as well. They're not as prominent on the higher time frames as they are on the lower time frames. On the 1 minute, there's a few, right? There's some 1-2-3s here that caught a nice jump where I was able to make a little bit of bread. And I believe there's a 1-2-3 here somewhere on the smaller time frame as well. But all in all, that's the trade, bro. Fucking 23 bands. It's pretty lit. You guys got questions about this breakdown at all? Because I'm definitely not going to take any trades now that we done blasted off. I'm sure they'll try to manipulate this area for the people that feel like they missed out and then run it later in the afternoon. So we can definitely check it out later. The market should consolidate from here.
Yo, X, I got a question.
What up?
Hey, so on that order block, right, and then like the downward wedge you were talking about, do you always analyze that to hit that order block, like the center of it, and go up, or is that kind of the trade you look for?
Let me see. So are you talking about this? So like you said the wedge, like when we were talking about this thing here, or?
Yeah, the one we were talking about earlier, whenever it hit the order
Oh,
block, and you
I
said,
see. Yeah, this 4-hour one here.
yeah, I know it's a
Yes.
big time frame, but it's kind of the same.
No, yeah, it's the same. Regardless of time frame, the picture is all that matters. So whether this is a 4-hour, if it's a 1 month, if it's a fucking daily, it doesn't matter. If the picture looks right, you have that wedge going into an order block, right? The only question is you don't know which one, right? So there's one here, right? There's one here, and then you can see this one like dug really deep, but it never actually hit this one down here. But if you have a wedge, it's eventually going to hit one of these and blast off. But yes, that is one of my favorite setups back when I was a retail trader. So the way that we trade now, believe it or not, is kind of based off that trade, because the 1-2-3 is how you tell price is slowing down and doesn't want to go down. But a wedge also says the same thing, but it allows you to see price breaking into these trend lines. Eventually it leads to the tip where it has to make a decision. And when that happens, you'll usually see a very impulsive move, whether that's to the upside or the downside. Sometimes it'll go up, try to manipulate you, and then completely blast down, or it'll actually grab from the low and then blast at the top. But at least at the tip of that trend line, something's going to happen. So if you can use the lower time frame to help get you an entry, then more power to you. You can catch the breakout. You know what I mean?
Yeah, I got you. Appreciate it.
Yeah, no worries, bro. Yeah, that's one of my favorite setups for sure. But I don't teach it like that personally because it's still technically retail trading, and mentally taking that is annoying. But at least if you know it's there and you can see that, you can have a bias or that warm and fuzzy to say, all right, well, if it's in the middle of this shit, it's probably going to stay here for a while. So it might be range bound. So you can use the range. But as it slowly gets to the tip of this these trend lines, it needs to make a decision eventually before those ends meet. So it could take as long as it wants, but when it finally does, usually will blast off. So if there's an order block there as well, it only helps because you know once it gets those orders, it needs to make a reaction. So
Question for you.
but
So with the retail trading symbols and stuff like that, signals, are you like, do you just kind of use them as like a lens to just kind of use like a filter to kind of look at and then go back to like other strategies? Because I've kind of like took that out of my brain and just kind of like trying to focus on more of the algorithmic signatures and stuff like that, and like the 1, 2, 3. So like,
yeah,
that's just the question.
yeah. Let me give you a different type of analogy, right? So for me, communication is a very big thing in my life, right, and in everyone's life, really. But some people are better communicators than others. And for me, I was a kid once, right? I was in the military once. I worked at fast food once. I've been a millionaire once, you know. So being in a lot of these different positions, I have a lot of different perspectives. So depending on who I'm talking to, I can choose to pick what perspective I would like to use to just add some insight for myself and how I want to perceive, you know, this type of communication. So when you talk about sitting in the seat of algorithm right now and wiping your brain, that's fine. You have to do that in order to get the experience of trading with the algorithm. But you also came from being a retail trader. So you also know what that's kind of like as well. So whenever you're done with your algorithm phase and you feel comfortable in that position, if you're able to use both perspectives, you can kind of clash them together to see both ideologies, and then you'll be a better communicator, which would make you a better trader, right? So when you see a retail pattern, you know they like to use retail as liquidity. So if they're using retail as liquidity and you have the brain to think from the retail perspective, you could see where they might want to take advantage of them. And then you can switch your brain to algorithm and say, oh, algorithm says there's an order block there. And if both of those philosophies add up, it just gives you more confidence to take that trade, right? So when we talk about that type of philosophy, it's good to only focus on one thing, but only for so long. Because once you get to a certain point of mastery in that field, you can't grow anymore. So you need to pick another perspective to grow in, and now you can use both, you know, and as many perspectives as you can grab, you'd be able to find out which one you can use in certain situations. So in this particular situation, it stayed in this area way too long and made this pattern way too perfectly. So I was able to say, you know what, let me step into the retail brain real quick. And then after I see that, I'm like, oh, that's nice. And then when I see it liquidate, that's cool. And I switch over to algorithm brain and it shows me, okay, this is a nice jump. Half of that point is here and there's an order block there. So if it already touched once, twice, here's the third run, can't fall down anymore. Algorithm says go up. Retail already got liquidated, so that should also go up. That helped me say, all right, yeah, we're good. Let's go make this new high. You know what I'm saying? Does that make sense?
Well said. Well said. Thank you.
Yeah, bro. Yeah, no worries. Yeah, I think that's a true skill. Not just in trading, but I mean in life as well, of course. You know, as a man, you definitely have to take into consideration of a lot of shit. So if you do it in real life, you can definitely apply it to trading. And if you don't do it in real life, then maybe if you do it with trading, you can be a better communicator in real life too. You know what I'm saying?
Yo, Xavier, I have a question.
What's up, dude?
All right, so I heard you say that you were looking at like in this Zoom call. I heard you say that you don't use your retracement or that you don't use 1, 2, 3 on the lower order or the lower time limits, lower time intervals. Is that true?
No, I
Like you
like
don't do it
doing
on
that.
15 minutes?
Yeah, I
Oh,
like
okay.
checking it on 15s, the ones. In this particular situation, there just was no 15, no clear 1, 2, 3 for me right here, personally.
Right.
But I saw it on smaller time frames, like the 1 and the 5. But the picture, the 936 picture was taken over more, so I just didn't worry about that.
Gotcha. Yeah. So like, all right. So like going forward to the right off of so I would say like a sharp increase on the price, and it's already starting to come back down. Would you say reset a new fib at the bottom of that and the top of that?
I see. I would do that for a short time period. I would only do it for a small trade. Don't expect to catch the 50 of this and then end up making some crazy highs, but it definitely could provide an opportunity for you to catch the wick up. But after that, like, that's all you could technically guarantee. There's a huge order block here that's also existing. So you could try to use that ideology, but because it's coming from a fresh high, there's a lot of manipulation that might happen because this is like price is right here. You know what I mean? It has not made any more candles. So something like this is a bit aggressive. So it should only be used for a shorter term trade. I would not put the 50 right on this, grab it, and then think it's going to even more highs. I would only like to see the candle wick back up to a small one, and then I'd probably get out of a trade like that. But on the contrary, you want to use a strategy. You know what I mean? What you're describing right now wouldn't necessarily fit the criteria of some of our strategies. So that would be price action trading. So most of the time, what I like to say is expect it to fail more often than not because it's not tested. You know, so for you to do something like that algorithmically, yes, it makes sense by the rules, but it's not a strategy that can give you confluence to feel confident when you press the button. And if it just so happens to do something else for a quick second, get you out of the trade, and then it happens, then you could be manipulated. Does that make sense? It'd be hard to spot the
Yeah,
risk.
no, that does. So you want to see it. So when you're looking at a fib chart, you want to see it bounce a few times between the 100 and the 50 before you try to get in and ride it one way or the other.
Um, so when you describe it that way, it should be taken as premium and discount. Right? You shouldn't just necessarily just use the fib because what is happening is when you do use the fib, for example, if I were to use the ideology you're speaking of at the moment, I would need to include the entire run because nothing has been in the way of it. So I would just take the bottom, take the top, and I would expect this to be a premium and discount range. And then I can apply the Fibonacci like this, top and bottom, and then that'll give me the extension levels. And then I can ask myself, all right, currently it's at the 50. It came down and touched the 0.38. Maybe I can go to lower time frame, see if there's a 1, 2, 3 down to this area, and maybe that can give me the warm and fuzzy to get in. So let's take a look. So we did that on a higher time frame, that 15-minute, and we're looking at this chart right now. If we were to take this bottom, take this bottom, maybe this gives us a better ideology of, all right, cool. If we bounce and bounce again, we could potentially run up. Maybe we hit this order block first, and then that can send us down for the third touch, right? So bounce, bounce, runs up, can't go any higher, goes lower past the 0.38 maybe, or even down to this 0.23 area. And then I can go for buys, talking about premium and discount. But again, this is more price action trading. So this picture is always going to look different, So if I were to give you something to help you, if this is the way you choose to trade, you would want to see maybe a 1, 2, 3 idea, and then grab. If you found the first bounce, maybe you can see the second bounce and a Fibonacci level. That could be an area of entry, or the third and a Fibonacci level. That could be an area of entry. But anytime you take a trade, there's algorithmically, it can only have one guarantee. So if you do take the second bounce and fib level, it can only go so high. So where is it going to go? The first thing that it's going to hit is the first order block. So there's like a really small one right here. So if I were to take this trade right now, I get in buys and I'm expecting this to hold this fib level and hold this for a second bounce. I can only take this trade up to the first thing that's given, which is the 50 and this order block. So I would have to put my take profit there. And if it completely obliterates, then I know this is the next level in question, and there's an order block here. So if you're going to trade this way, then you need to know what a guarantee is like. Maybe what's what's in the way, right? You need to have what I like to call a layering effect. So a layering effect is how you choose to pick an entry in the market, right? So what's in your way at the moment? Why should you get in and where should you get out? You can walk yourself through the process of where is price right now and where does it have to go? Price is currently in an order block. If it reacts to this order block, it would have to go up to this fib line. Is that enough of a reason for you to want to get in and take this trade? If it's not, then maybe you need to wait for more confluence, right? So maybe there needs to be some kind of 1, 2, 3 or a higher time frame aspect. Does that make sense?
Yeah, no, that does. I definitely was like, I guess I didn't spell all that out, but like using like multiple indicators to like kind of pick where you want to get in and get out, like you were saying. I just didn't know if that was like something that you could play off that or if it was too volatile.
Oh yeah, you
I
definitely can.
let it play out a little more and give you some better indicators.
Yeah, for sure. Yeah, that's all it's about, bro. Like honestly, you can do anything you'd like on the market, but we like to stick with what gives us the most confidence. So although you can take these levels and you might actually make a successful trade from it, how many times can you replicate that same exact trade? You know, if you can see it happening in the future, cool. If you see it happen often, maybe that could be your thing. But it is very hard for me to back that ideology because of how many things that I've tested. So I would rather not tell you, hey, that is something you could, find yourself doing when I have other things that have been tested a lot more over the years. You know what I mean?
Oh, exactly.
So, yeah, in that manner, I would definitely use multiple indicators to try to help that philosophy for sure. But it's not a bad philosophy to use. I'd back that. All right. So yeah, we got any questions, gentlemen? Any more at least?
Can you once you put a buy order in or sell order in, can you I was trying to mess around with trading views and do it. Can you add a limit later?
Yeah, you can. You just need to add the opposing level. So earlier I was doing a demonstration of 10 contracts. Okay. But here, let's say you mean like put a stop loss and take profit type, or
Yeah, like say you put like a buy order in for one. Will if you put
okay.
a sell order in for one, will that automatically sell that contract?
Yes, if you're talking about like this, yeah, or if we're talking about
Yep. Oh wait, keep going.
so if you wanted to put a stop loss,
No, it'll put a sell order in for you after it takes your buyout.
oh no, not at all. Look, check it out. So right now I'm in one. If I go press this, it just takes me out. That's it. If you press it twice, fat finger
Okay.
it, then yeah, it would. But if I press the buy button right now and I wanted to set up my trade, then I would just press the plus button, put a sell stop, right? If I wanted to put a take profit, I'd put a sell limit. And now if that buy hits one or the other, it's going to sell regardless. You know what I'm saying? But if you'd
Oh
actively
yeah,
like
that's
to
what I
get
was looking for.
out, okay, cool, yeah. So that's how you would do it, especially if you're on trading.
Damn, I must have figured it one time because I thought for sure it just put me right in another position. I was like, motherfucker.
Bro, I've had some experiences where I'm only trying to trade with one contract, and then I'm like, all right, cool, let me get out of this, and it don't work. And then next thing you know, I'm in fucking 10 different cells, and I'm like, how the fuck, bro? So I personally stopped pressing that button and just started putting the limit orders in. But sometimes price moves really fast and then just blast through your limit, so you never get filled either. Um, so I don't know, you gotta pick your poison. You feel me? uh, yeah. All right. I think today was pretty dope. Caught some pretty fire trades. Definitely got some good explanations out of it too. I'm glad you guys got to see the 936 strategy live and were able to bring the right questions to the table. So I appreciate y'all tuning in and everything. So if you could need anything else, you can definitely hit me up in the Discord. We got the calendar for the one-on-one stuff. And then we also have the live trading that will take place next week as well. This week I was traveling to Okinawa, and I was also in Osaka, a little busy. So we skipped a lot of the high volatility days because this week was very, very news heavy. So we'll see how we get busy next week. Probably analyze some higher time frames again. Yeah, and then from there we'll move on for the trading days. Let me get some feedback as well on. Yeah, I got you. I'll cut this video up for the 936 strategy and add it in there. But if you guys could throw some feedback on the videos that we just recently uploaded, we're going to be continuing to add to the course as well. I'm going to go more into psychology now that we finally got all the technicals laid out pretty nicely. So hopefully this psychology section of the course can help us look at the market from different perspectives, right? Because technicals is pretty hard, but again, your mind is the biggest enemy on this market for sure. So hopefully I can add some value to that, but I need to know that the technicals are straight before I can move forward. So the more feedback I can get, more confident I will feel moving into the next category.
Yo, I have a question.
Yeah,
So you're setting your entries and you're using your premiums and discounts. It's like sometimes you go like 50 and sometimes you go like the bottom. What kind of sways you one way or the other? Or is just how aggressive you're feeling?
Hold on. So you said if I'm using premium discount and it's
Yeah,
under
so
the 50.
so you're looking at like an order block, right? And say it's a buy order block. So how do you decide if you want to set your like entry point at like the 50% of the order block, or if you want to
Okay.
set it at like a different point? Because sometimes
I
I was looking at them and I'm like, I see a good order block, and I'm like, okay, and it does exactly what I expected, but I set my entry like just too out of range. Like I was trying to be a
too
little too
low.
passive.
Yeah. Yeah, I think it's very psychological. Um, and I think it's very habitual. And what I mean by that is like we all have habits, right? And we all feel, again, like you said, right, more aggressive sometimes or more passive sometimes. So a good indicator that I like to use to be more passive or more aggressive is when you take the Fibonacci and you have the amount of level. So for example, I'm just going to take this bottom here. I'm going to take this top. Anything under the 50, I would expect to be less aggressive, right? So what I mean by that is if there's an order block right here and there's a buy order block, it's under the 50. So if it gets down here, I'd expect the middle to actually hold up because the market has already fallen so much that it's looking for anything to just kind of give it a bounce. But if it's aggressively seeking a level, it doesn't give a fuck about your order block. So you can try to aim for the middle or the bottom, and oftentimes it'll dig to the next structure level first, and then it could potentially come up if necessary. So in order to know if a level is being seeked or not, you will see price completely like blast through certain things. So for example, here, it obliterated this order block, right? So there was no way we were getting that. But it also came from a very big run. So you can tell after sweeping this whole thing, all of this is probably going to be very aggressive now. So if it does come back down here, you might get a small reaction, but this little order block is not about to give you new highs. You know what I mean? So if you're in an uptrend and price is retracing and it's going to that area, then cool. I think the 50 and the lower end is totally fine. Sometimes it taps just the top of the box, right? So we never know where it's going to go. But if you wait for the candle to actually do what it does, maybe you just get in a little later. And as long as that risk to reward for where your take profit is makes sense, and I think that's all you can go for. Unfortunately, there's no clear cut definition of where you can do it. It's very psychological. So I think if you can analyze the trend and you feel confident with the bias that you have, meaning you think this market's going to go up, then trust your order block. You know what I mean? Buy where you need to buy it. Understand how much risk you potentially happen. And if you get stopped out, you get stopped out. That's just how much the trade costs. And you just got to try the next order block. You know what I mean? It's inevitable for us to lose some trades, but it's all based off of the whole picture, not just that order block alone. So one of them is going to work, but maybe not that one. So don't add too much risk to just that one when you know damn well it probably could go. So you need to try to figure out how to size into a play rather. Does that make sense?
Yeah, no, that's good advice. That's kind of what that's kind of what I was looking for, like the answer I was looking for, like an ideology behind it.
Yeah, for sure. So I like sizing. So when I go into an order block, I'll only buy one just to get the feel and feel confident. Like I don't feel good unless I'm in the trade. So if I buy one contract, cool. Or you could switch the account. Go to your demo account, get in there, and then wait until that looks good, and then get on your regular. You know what I mean? Whatever process
They
you
took
can
away
get
my
yourself.
demo account.
Huh? Oh, they took it away.
I got funded, so I think they just take it away when you get funded.
Hmm. Oh, you might be able to go on there. Oh, go on topstep.com. Go on your what's that called? The screen where it shows your account, and it should allow you to say activate practice because I know they updated it to where they wouldn't allow people to have one unless you activate it or some shit.
Okay, gotcha.
But yeah, scaling is definitely the ideology you want to use with the order block. Don't just grab all 10, 20 in that one exact spot because if it does decide to bleed and stop and chase you out, then you're gonna get clapped off of just one trade when you didn't really have to.
So you set your buy order or sell order for like one contract, and then once you're in it, it gives you the reaction you want. You buy up more.
Yeah, exactly. Yeah. So if you buy one or two, that gives you the confidence to say, all right, cool, I'm in the trade. And now you can average into that. And it won't feel like you're getting a high entry because you see the entry you actually got and you like it. So it's
Yeah,
only
that's good
going to raise.
advice.
Yeah. So that's a tool I like to use. It helps me feel more confident in a trade. I call it sizing in. So yeah, sure. Cool. There's definitely a good video. I appreciate all the questions. They're pretty fire. So I know we got a lot of new guys in here as well. So you're bringing back some of the stuff that we definitely could calm over for sure. So I truly appreciate y'all tuning in and bringing the best questions and communication forward. So I'll be on again next week for the trading stuff, and I'll be chilling this weekend. So if y'all need anything, just hit me up.
Thanks, bro.
For sure.
Appreciate you, bro. Yeah, all your videos, by the way, are pretty good. I like the one where you sat down and watched the video with us. So the Zoom call, that was a pretty good ad.
Hey, yeah, I was trying to adopt that style and see if I can create more content with it. I didn't really hear back from nobody, so I was like, all right, cool, I can leave that like that, man. But
No, that was good,
appreciate it.
bro. That was good.
Cool. Appreciate that. Then
Have,
I'll
have a
get
good weekend.
yes, sir. Likewise. Talk to y'all. Peace.